My first question to you, has the Fed made a policy mistake?
So I think the price for interest rates is wrong today. I mean, should they have moved? I don't know that they were set up to move, given what they had told the market prior to this. That being said, if you're running, inflation is running 3-month moving average of inflation is pretty darn close to 2 by almost every metric. And if you've got slack building in the labor force, which we knew prior to this, 5 3/8 is the wrong funds rate when you've got inflation running at certainly low to mid 2s. So, yeah, I think they're behind the curve, and I think this price for rates is not consistent with where the economy is today. Certainly not consistent with where inflation is today.
Rick, when you look over to September now, and if you look at market pricing too, it's starting to think so as well. Do you think that they're needing to go 50 basis points to really get caught up to where we're seeing the market headed?
So I don't know. I mean, there's data between now and then. I'm not sure today. If you ask them today, are they going to go 50? Listen, some of why you're seeing the increase in the unemployment rate is you're actually expanding the labor force. I mean, so much labor has come in to the labor force that's outpaced the amount of job creation, or quite frankly, it's getting those people integrated into the labor force. So I think the economy's still in pretty good shape. Is it slowing? Yes. Should the rate be lower? Yes. Would I do 50? I would do 50. I would have cut by June. I just think they need to get the rate to, if you got the interest rate to 4.5% quickly, that is much more consistent where the economy is and where inflation is today, and they should get there.
Well, let's talk about the reaction in the bond market, because the rally has been absolutely breathtaking. You take a look at the 10-year Treasury yield now, well below 4%. Rick, you and I spoke after the June numbers came out. We were at 4.4%. You think about where we are right now. Even with that in mind, what the Fed probably should do here, do you think that this rally has gone too far?
So what's pretty extraordinary is the markets have basically ignored what the Fed's saying. The markets have said, the Fed's behind. They're just going to have to get there. And so it's pretty remarkable how far the markets have come. I still think it makes sense to own interest rates. We talked about last time we were on. You keep owning the belly of the curve, hold this yield in the belly of the yield curve. How much the front end has moved for the Fed to fulfill that obligation? They're going to have to do 50, and they're going to have to move at every meeting subsequent to that. Listen, has the front end moved a bit too far? Maybe, but I'd still own the belly of the yield curve, and quite frankly, I'd still own yielding assets and hold them for 2024 and probably into the next year.